Hello, welcome to another weekly market review. It is the 4th of August 2020. The market has had a spectacular couple of weeks. We have a multi year breakout on cryptocurrencies. Let's have a look at the big opportunities before us. So, looking at the total market cap is the monthly, and what you can see is quickly I'll move to the line chart to show you something significant. So this is the high, the December 2017 high. Made a lower high. Okay, we made a sideways, another lower high, which made the low. So this can still be disputable, but this is the high that made the low. We made a higher high, a higher low, and a confirmed higher high. There may be some who may say that this is technically the high. 381 level is the high that makes this low, which may also still hold. There are others who may deem this to be the low that made this to be the high that made the low. So anyways, what we have on the monthly time frame is a higher high, a higher low, and a higher high. If you take this to be the high that makes the low, we have broken market structure on the monthly time frame. If this is the one that you think about, then we still have, but nonetheless we have a very strong market structure on the monthly time frame. Quickly, let's move to the weekly. So the weekly as well, you can see basically after the big move that built the low in 2018, we have built that base and that structure which I spoke about. We have broken above it. We have closed above it. The weekly close on the total market cap is good enough to signify that we have now broken up from this big rejection in 2019. Because you can see how price got rejected from here, 1 2 3 4. There was a whole month of rejection from this level, after which we never broke up above this weekly block. So I had spoken about this weekly block and I had spoken about this weekly block, how significant both of them were, and we had been getting very good reactions from them. But the previous week we have closed above even this big 2019 consolidation. So it's quite evident and quite clear that this market is now gaining strength. This market now has global interest. This market has the interest of the institutions. So it is very significant, and it is a big trend which will now tend to get supported. So I think the opportunities that await us are immense. I think this is the time to be able to make the most of it. I think we should go to the 1 hour. Well, let's look at the 4 hour on the total market cap. So the big level 353, I had given this level on the Discord. What have we done till now? We've made a 618 retrace after the drop, a slow grind up, which was again very significant. What I would expect now is, since this is quite significant, I think we should get another test down to these levels. This is a very, very bullish reaction from this big sell-off. This basically has turned into a liquidation cascade, and since then everything has just been bought up. Like, this is FOMO right after the liquidation cascade. But right now what is clear from this price action is that demand is very high. So what the shape of this consolidation itself is quite bullish. We are basically reclaiming VWAPs, and prices constantly trying to move up. So a move up straight from here, I would say once we are above 353, you can deem to once price does find support here, you can play for the upside. But I think this would build some kind of a weaker structure if price was to do that. If we are to get that consolidation, that it should happen within this range, and it is possible we may get another stop run, another push up. These are equal highs right here, so price can come up and take these if it does have to, but eventually we should get another move down. Whatever that move down is, we will have to see how deep it comes, but I think that is a buy. That for me is a screaming buy. You have to of course still manage your risk. I would say this big cascading liquidation wick has currently become the place to be managing your risk for cryptocurrency market, for the crypto market. And we should see either here, or if we do end up making a slight stop run or leg higher, look for that retrace. It is possible that we do get a golden pocket retrace around this weekly level. If we are to get a possible retrace of the lows, this is still significant. This VWAP that I have drawn out from the inception of this big move, it is still significant, and it's possible that that VWAP in confluence with this consolidation right here is able to support price again, because the shape of this and the way that we have got the reaction, it is so bullish. It is likely whatever kind of sell-off we do get is going to be bought up quick, and this trend either still builds out a longer consolidation, which would mean that there is a probability for a range. The lower boundary for that range would become the bottom of this consolidation on the 4-hour. So I would say the lower boundary of that range would become what, the 310 312 level. This is right now 4-hour level. So this is possible that this becomes the lower boundary of the range, and the 363 level becomes the upper boundary of that range, and we do get a couple of moves from the top to the bottom, with price basically getting decent reactions from here. That's what you want to see if this is a bullish consolidation, which it is looking like. So for now, the game plan should be to allow first price to build what is already seeming like a potential local top, and watch for the retrace and buy the key levels. This golden pocket level looks quite nice. If it's still selling off a bit strongly, these lows right here are what should give a decent reaction in confluence with the VWAP. So the altcoin market cap on the monthly time frame, we made a very clean breakout from this 2019 level. You can see that price has not only broken up but closed well above it. So this is very significant for alts, and you can see that is the reason why they are grossly outperforming BTC currently, and really making big waves in this market. So monthly, again, very bullish. The weekly, we had set some targets. You can see that there is still some way. This is from last week. We still have this big 192 level, which is another decent 50% move from here. I would say, if not 50, possibly 40. Yeah, about 40% move from here. The target for this base breakout that we have had, and you can see how bullish it has been since the end of June. All of last month has just been very small consolidations before moves up. We've had a big sell-off, but if you just look at the anatomy of that sell-off, and basically anatomy of what we have done all of April and May, essentially, which looked like a consolidation phase for BTC, or they built a ramp. And this is what I was showing everybody in the Discord, that we had built this ramp, broken up above it, and tested it as support. And my exact words were that if this is true, we are in for some big moves, because if price is preparing a ramp like this and builds a move out of this, essentially manifesting that target on the total market cap chart, on the altcoin market cap chart, does look like a decent probability. So we should be looking at structures, we should be looking at a strategy of how to get in this market, how to manage risk in this market. And for now, you can just see that we had that move, and all we've done is pulled up right after it. Price wasted no time to just move right out of that zone. And what I would say is that even though price has moved up so strongly, there is still a probability of some kind of a retest. I would say looks like a very interesting level. Again, the golden pocket level. Maybe we do still end up making one more move up. Already on the hourly, we are diverging. Quickly, I will show you the RSI. So on the hourly time frame, you can see that we have a divergence. It is possible that we may build another one, but for now, this is where this pull up is looking slightly extended. But that's the thing, when price is so bullish, it makes it hard to short as well. If somebody is trying to short this, I think they're in a bit of trouble. And it is strong enough to take the highs once again, but once it does, I would say we will get a retrace, and this will be the dip to buy, because this is strong, guys. This is as strong as price can be. Look at this grind up. It's just grinding, strong impulse, quick sell off, buy off. We'll get another sell off right here. Get in, manage your risk from a solid level. I think this around this 120 golden pocket level should be a nice place for a price to get a reaction. Even if it is slightly lower, it could be the 786 to take out these lows. But just watch out for these key fib levels and build out that plan to get back into the strongest trends. Currently, XRP is in a strong trend. Ethereum is in a strong trend. Apologies. Large caps are doing pretty well. Link is again gaining strength. Tezos is starting to look good. So some of the mid caps are starting to get a bit of joy, because the last leg was all large caps. So keep a lookout. Of course, keep a lookout at DeFi. DeFi is the leader. I did speak about it before, that DeFi is the leader. Its market cap is significant enough to take this entire market with it. So that is the play, guys. For alts, the plays on spot are on Uniswap. That is the exchange to be on right now. And the plays on leverage are just all over the place. If you are on Binance, on FTX, you can be having some really decent gains if you're able to manage your risk well. This is what most of the crypto market has been waiting for over the last 3 years, and this opportunity has arrived. I would say make the most of it, prioritize it. If you do understand and do know how to trade this market, this is the time when the gains can be life-changing. If you don't, and if you want to learn, and if you want to know, feel free to join our free Discord. It is giving more value than most paid groups out there. I don't have anything against paid groups, but what I would say is that what we are offering for free, there's too few people that are using it. If you are using it, please share us, tell your friends, tell your enemies, tell everybody that there is a place where there are some good traders, some genuine traders, and some really nice calls, and good way to make money in the markets right now. So this is the game plan, guys, and I would say whatever dip we are going to get over the next 2 to 3 days is the dip to buy, because this does not look like it wants to come back too much deeper. It is most likely that we do not take out these lows and we just build another retrace from here and move up. So keep a lookout for that, and this should happen. For me, this should happen within the next 2 to 3 days. So we are anticipating it, and we will be waiting for this dip to buy. So as Bitcoin on the monthly, you can see we've had a solid monthly close, well above the quarterly level, the 10,770 level. And currently all we've done is this month we're trying to consolidate above. I had given a price target of 10,300, which was basically something that we can see a bit more clearly on the weekly. and it's basically a retest of this breakout of the base. This is a um, very significant base. It's a 1 year base that BTC has broken up above, and the target I was giving for everybody was to get a retest of this. But if we look on the daily, essentially we have been so bullish that prices come nowhere close to that yet. The first big liquidation cascade also front ran that level. If we look at this entire retrace, the 0.5 level was getting quite close to this significant monthly level. I would say BTC has been weaker than the alts. So if this is where we do get that turnaround, it is still possible we end up getting that retrace. If we do, this is a great place to manage risk on Bitcoin. So if that should be our game plan, guys. I'm last week's review I was just showing you targets for BTC, and this week's review I'm just giving you very strong levels where you can expect a decent reaction. So I would say if price does end up still coming down to this 10,300 level, it would be a good place to manage risk. Let's quickly look at the hourly over here. So yeah, you can see the bounce on BTC has been much weaker than its alt counterparts. We have confluence in this quarterly level and the 0.7. If price is too weak, maybe we still take out this wick, though I don't see if that there is any reason to do so. But if alts need to be pushed down a bit because they are so bullish, it is still possible we could get a test of this monthly level. If not, you end up finding divergences in strength. This 0.7 level along with this quarterly looks like a very nice place to find confluence. So it's basically buy the dip mode across the board, and another couple of set of levels for BTC for further continuation. And in terms of the next leg, I think the next leg for BTC should entail us to go to this 2018 yearly open level, where we should have our next consolidation. I would say that BTC, once we break this 13,800, let's quickly look at the weekly just to understand, or even the monthly. This 13,800 once broken, guys, we don't have a monthly close above this. We don't have much price action. I mean, we don't even have much price action where we are right now. If you look in terms of the monthly time frame, this is the second highest monthly close of all time since we have broken it is basically the second highest monthly close of all time. This was the highest monthly close, and this is the second highest monthly close. In terms of price action, we don't have much price action here. So I would say once price crosses this 13,880, you should expect some serious acceleration on Bitcoin's part. So what I would say right now, what is happening is that there is a lot of movement in altcoins, and essentially a lot of market makers are trying to make as much Bitcoin as possible. But once BTC ends up taking out this 13,880, there can be some very strong moves, and potentially it is something that can create at least partial inverse correlation. But in terms of alt BTC and BTC USD correlation, over this last move up, we have seen that they have a strong positive correlation, wherein alts and BTC are moving together. Alts are outperforming BTC, but each time Bitcoin gets a bit impulsive, alt BTC takes a hit. So the good strategy for now has been to actually follow Ethereum. Ethereum has been the leader, and every time Ethereum has been moving, BTC has been following. Essentially, it is the last entire leg up. It was Ethereum that was pulling the market. At times it was Ripple. I don't think Ripple should be forgotten. It has had very comparable gains to Ethereum. So the two big coins in crypto outside of BTC have been outperforming Bitcoin, so which is very positive for the market, especially XRP. XRP has been in a constant downtrend for a very long period of time. It is so significant that even a coin like XRP is gaining strength. So for now, yeah, these are the levels for Bitcoin that I have mentioned before, and the reaction that we should be getting is this next reaction is this 13880 yearly open. Beyond this is where I think Bitcoin goes impulsive. Here's what we have for large caps against BTC. You can see we've had just a really strong downtrend since 2018 and 2019 August. We came close to hitting the bottom. We built what we can call a 1 year base, and on the monthly time frame it would really depend on this month. But if this month can close above this 578,000 sat level, then I think we are ready for some big moves. On the weekly, we have already broken up above some significant levels. You can see on the weekly time frame we have also broken market structure. If I'll just remove the C fork, so you can see this is basically the high that made the low. So we made a higher high, higher low, and a higher high, and we broke this high that made the low. Not sure what this wick trading view has sometimes a lot of errors, and I'm using sketchy exchanges for more history on this. But on the weekly time frame, currently what you can see is that we are flipping this key daily level into support on the weekly. So this is very significant. Not only are we making highs, higher highs and higher lows, we're turning previous resistances into support. Let's quickly look at the daily. So on the daily again, we've had one leg, this is the second leg, and it's possible that now we're currently going to build structure and test at least first this weekly level. I would say once this flips into support, we can start looking at some very strong gains. Would expect a reaction from here. We did end up breaking it before, but it is quite significant, so would expect a reaction from here. But nonetheless, once this turns into support, we have not done that. We have not done that for more than a year. This is more than a year long consolidation that price is now wanting to break up from. So very significant on large caps against BTC. Like I said, they have a give and take relationship with Bitcoin, which I think will continue to get sustained. That as soon as BTC is consolidating, odds are moving up, and each time BTC moves up, alt USD are taking a break while alt BTC corrects slightly. So if this relationship continues, it would still be prudent to be going long on alts because they are outperforming Bitcoin. Of course, you should still have some kind of Bitcoin. It works as a good hedge, but alts against BTC are still looking decent, and they have broken high time frame market structure. Looking at the S&P 500, and for traditional markets, basically we have two themes. The two themes are the presidential elections, which are in November, and the weakness in the dollar. So we just discuss what the repercussions, what the effects, what the statistics and what the numbers are, what we can expect for the next couple of months, all the way till the elections. First of all, what I want to show you in how we can see that the market is tiring is just to look at price, the shape of price and how price is moving. You can see from March bottom, the initial impulses, the magnitude of the impulses was quite strong. 20% move, here's another 17% move, and we had another 7% move. After that we had another 10% move. But essentially you can see that the big impulses have started to fade away. We're getting much longer drawn out, choppy and sideways price action, which is to be expected, but it is still reflecting strength, and what I would say is over the next 3 months we will end up getting one correction. Whatever that correction would be, it will be a mid-term to long-term dip to buy, but until then there is shorter time frames. There's what we would say individual plays, the indexes themselves, I do not think, unless you are playing very low time frames, these are very profitable to play. Last week we showed a strong divergence right here, and I think it gave about a 2 to 3% move. Yeah, it was about a 2.5% move. So we're getting another divergence right here, which is new highs very close to the weekly level. We have to see, how price reacts, because you can see that these VWAPs are staying effective and price is still ending up supporting them. At some point that they have to start getting taken out, but the indices in that sense are still holding up. We did expect that July would at least give us some kind of sideways and potential continuation of a down move. That did not happen. We are now moving into August with that same sideways grind, with individual names doing really well, with the large caps doing exceptionally well and keeping this market up. Tech has had spectacular earnings. Most of tech has had very good earnings, which has kept this market in a very positive mood. So for now, I would say individually as indices, there's not that many great plays. You do get divergences, and on shorter time frames you can get a percent or two here and there. But we'll just go deeper into the statistics and what we can expect in this. So here we have for the S&P 500 and the election theme, another very strong correlation and a good bunch of statistics, which is to do with the incumbent party and the S&P 500 returns. And we can see that it is very strongly correlated. Over the last 23 election years, it has only been thrice that this correlation has not been maintained, which is that when we have a positive return, the incumbent party has won. So this year we have a positive return, so it's just something to keep in mind for the probabilities that come along with a positive return. And there is still some time for this return to shift, but I mean, we have to wait and watch where prices in November, and you can see how significant this statistic is. So again, looking at the election and this theme of the elections and the markets, this is something to keep in mind. Here is another statistic that is related to the election year, and what we can see is the volatility, and we have elevated volatility, especially in September and October. So August generally has tended to be slightly less volatile, but September and October election years specifically have been very, very volatile. So again, this is another graph, another set of data, which is for our election theme, and something that you should keep in mind when building a plan for the next couple of months. Something more for the coming months of August and September. You can see very clearly here we have the statistics of 1950, past 20 years, past 10 years, and the election years. The green one is the election years, and these are returns since 1950. So we've had a positive August, we've had a sideways July. So we have already had the sideways July. There is still potential for this positive August. September is choppy, but you can see in general, the returns are not overly significant, but what we have outside of the election years for August has been generally quite negative over the past 10 years. So there is a certain kind of conflict over here, and something which is significant and something to keep in mind. Also, another very significant thing is the October that we have for election years, because elections are in November, and generally we have seen a sell-off in October. This has been quite a concurrent theme, but for now we are in a special year. 2020 is a very, very special year. I do not think anybody who has lived this year will live to forget this year. So we don't know if in this special year these statistics are going to hold and they're going to help, but nonetheless I think this is showing us that we cannot expect overly big sell-offs because of how significant the elections are for the current running president and for his prospects of winning the presidency again. So this re-election for Trump could be a very big reason why the market is being propped up the way it is, and it could signify, since it has already had so many gains, that we can still chop about, and the market can still continue to remain and stay in that positive band and that positive spectrum all the way till November. Here's the second theme that we have, which is the weakness in the dollar. And currently, what I can see, okay, we are at a quarterly level. I did mention this before. We're getting some kind of a reaction, at least. This strong 4 months of drop has, stabilized right now over the last 2 or 3 days. We are still to see whether we get this confirmation and this continuation, because this does look like a multi-month fake out. There's a very long base on the dollar, and what we've made is a multi-month fake out, and we've broken down below. We've broken market structure, and this is reminding me a lot about this 2009 2010, when the dollar went into a 2 to 3 year downtrend, and it very much looks like this is a probability. And all this does is it reprices a lot of assets according to what happens in this downtrend on the dollar. So very significant, and we will see what the effects of this kind of a downtrend are, what they are on all asset classes, and how significant this is for our strategy moving forward. Just a quick look at the commodity index. I mean, this is just a commodity index I have built very quickly. I want to show you the effects of that drop on the dollar that I just showed. So 2009 to 2011, almost 2012, you can just see what the commodities did. They went on a perpetual uptrend. This is a monthly chart, and this is a very strong uptrend on commodities. So what I would say is that if we do continue to see that weakness in dollars, this is what you can see. This absolute and very strong trend, a multi-year trend on commodities if we have a multi-year drop in the dollar. So it's very significant, and I think it's a chart to keep in mind when you are looking for a strategy. And I think these are the metals and other commodities are the ones which have great trends and great plays. And this should be kept in mind that the weak dollar will continue to strengthen them. Here we're looking at a chart of the emerging markets against the SPY, and here's another theme for a weak dollar. This is end of 2008, and this is basically 2011, all the way till 2011. You can see that emerging markets outperformed the American markets all the while that we had this weak dollar. So you can see we have built some kind of a structure. Let's quickly look. I'm sure that we can see high time frame divergences right here. Yeah, so we have high time frame divergences of what you can call this falling wedge, which is now broken out. So we can see that this can be the theme over the next few months, that we get strength in emerging markets, because that is another result of having a weak dollar. So this is another probability, and this is something that we need to keep in mind for our strategy for the coming few months. So for more statistics on the industry groups of a weak dollar, and you can see that these are the big winners when we do have this weak dollar relationship. And you can see that more recently we have had strength in materials. So this should continue as long as the dollar weakens, and it is very clear all the winners over here. Should keep an eye on it. Of course, because of the pandemic, we still have to look at software and technology, because this is a real world use case. So even though they are losers, it is possible that they do continue to thrive. But still, this is something that needs to be kept in mind when we do get an overly weak dollar and the potential for a rotation. It is possible that we get a good rotation in these industry groups because historically it has supported it quite significantly. For our individual commodity play, we are back to lumber. Lumber is something that we had been following, and we played the big impulse of lumber all the way from this 422 level to 571. We got a bit of a sideways correction. The yearly 477 level held, right? So on the monthly time frame, you can see that now we are getting close to historic highs, and like we discussed, that commodities can get the strength that they need. It can be continued strength as long as the dollar weakens. So this becomes significant because there is no overhead resistance. We have broken all the resistances we've had. This is the last monthly level which we are currently finding resistance at, this 596 to 600. Once price closes above it, and once we do start finding support above this 596 to 600 level, I would say that this has a lot of room to run because it will be moving into price discovery. And we do know that every time any asset moves into price discovery, it gives a higher probability than usual for a continuation in trend. This is already a very strong trend. We've had 4 very good months in lumber, and as soon as I think this big resistance is taken out, we could structure out here a bit like most other commodities will, because dollar is finding some kind of support. But I think you should keep this on your radar, because once you do find support and you can build out a plan of where to catch this, then it is more likely that there are some big gains in store for lumber. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!